This is Eric Muathe, Muathe.com, with a weekend market analysis for February 16th, 17th, and 18th, being a long holiday weekend. So let's take a look here at the close of Friday's session. We can see the Dow was up almost 450 points, and we can see the media highlighting the weekly gain for the markets here at the close of the week. Of course, S&P 500 for the day was up 1%. Nasdaq was up about 0.61%, and for the week the Nasdaq was up about 2.4%. For the week the Dow was up the most, up 3.09%, a huge up week for the Dow. Take a look at the S&P 500, which was up 2.5% for the week. So it is self-evident that those of us, including myself, who came into this past week expecting a market pullback were absolutely wrong, and the market just kind of in your face continued moving higher. And of course we can all see what the media is highlighting, these 8 straight weeks of gains as far as the Dow is concerned. Very, very impressive. There's no other way of characterizing the recent market move over the last 4 weeks, and especially, let's call it 8 weeks. If you go back to the lows here, a very, very strong recovery. Of course, in the stock market, the jury always seems to be out. So, of course, now we continue with the main question we're always going to be asking ourselves in the market is, what next? What is the next meaningful swing trade direction? And pretty much that's always going to be tough to tell, especially after such a nice move. Now keep in mind, something we always cannot be able to identify is these types of sharp reversals in the market, where you have a huge reversal, like for example here, or let's even take something like this failed breakout, move lower, you drop, you recover, drop, recover, drop, and then recover. So of course there's nothing stopping the market from staging 10 weeks straight up weeks, 12 weeks. Really, the market can continue higher. But there's also the other equation, which is, for example, here we can see we took 4 weeks on the way up, and it took us 2 weeks to lose all those gains. We can see from this breakout point here on the SPX, this is 12 weeks in the making. Yet on the way down it took us 2 weeks. So that's also the other equation. And these things are always hard to predict, but it is a reality. Yes, the market can continue higher, but it can also give back gains faster than it did when moving higher. So also let's consider that also as we move forward. So one of the positive developments this week was this area where we had seen the S&P 500 stall. So let me clear that out. So this area where the S&P 500 had been stalling since late 2018, we can see now we've actually cleared this level. So for now this looks like good action. That's exactly what the bulls wanted to see. Having said that, now we see that the market is coming to an area where it's going to have to decide what to do, which is the RSI topside, which is now back in play. So if the bulls are going to charge this market higher, we would need to see movement above the red line, and failure to move above the red line, resistance here, means that now there's a probability, higher odds of reversal in the short term. Another way to look at this is figure out where we had initially broken down here. And I'll just draw this line. I'll explain this line here in a second. You can see break below the line. You move above the line eventually for this breakout. You break below the line here for this movement lower, and now you are back testing the same area. So again, we can see that if the bulls are going to move beyond the current levels. In other words, if the market is to move higher, we would need to clear that black line, and resistance on that area around here. Again, it doesn't have to be in the coming week. In the coming weeks, if we see resistance here, then that suggests that there's a pullback in store. Now, one thing, if you take a look, this is a 2-year weekly chart. So 2 years of data. And I want you to observe something here, which is the difference between what happened in 2017. Just take a look in relative terms how this was very tight. Compare with the market action since January of 2018. Up move, down, up, down, up, down, up, down, up, right? We can see there was a nice 12-week rally here. But like I mentioned, it took 12 weeks to build that move and 2 weeks to kill it. And then we go into this phase, very volatile. And what I'm getting at here is the market has become very choppy. And what we know is that choppy markets or unstable markets tend to resolve to the downside over a period of time. So it's something to consider, just the fact that the market net over a long point of view, which is a 2-year weekly, looks very unstable. And so just as we go forward, chances are that if there's going to be a resolution over time, it would not surprise that the next meaningful direction would be lower. Now, there's a simple way to gauge what the market is doing here, in my opinion, and what we can do is just take the recent breakout on the S&P 500, which took place this past week here. Use that as a gauge. So anything above that level, we can conclude the market continues to be stable to bullish. So anything above 27.37.70, which is this close here, anything above that, and the market should continue being bullish, and you can anticipate further movement to the upside. And we can also use the same level. If the market is to break back below that level, then that becomes a reason to consider the possibility that the next meaningful direction could actually be lower. So this number here can be used to gauge how healthy the market is. That concludes the free portion of this video. The rest of the video is for paid subscribers, for everybody. Do have a great long weekend. See you in the next weekend market edition. For paid subscribers, let's continue on.